What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 15 free stocks plus $30 in free cash, get yourself down to the description box and click on that Moomoo link. When you open up your Moomoo account and you put $100 in there, they're going to give you 5 free stocks plus the $30 in free cash. If you put $1,000 in your new Moomoo brokerage account, they're going to give you 15 free stocks plus the $30 in free cash. This is a limited time offer, and you got to make your deposit, guys, when you open your Moomoo account. Like I said, get down to the description box, click on that Moomoo link, go get that free stock, go get that free money. I can also send you 2 Moomoo tutorial videos that will help you learn how to use the Moomoo brokerage app. And all you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Let me know you've opened the Moomoo account. Let me know you funded it, and I'll send you those tutorial videos. Well, guys, the stock market got off to a rocky start this morning. Here's the headline. Stocks are little changed as investors evaluate rush of mixed earnings. Remember, we're in earnings season, right? We got a lot of companies that are reporting their third quarter earnings, and they're saying they're kind of mixed. Stocks were muted Wednesday as traders digested a deluge of earnings results and looked toward further reports from major technology companies. The S&P 500 was marginally higher. The Dow Jones Industrial Average added 121 points or 0.3%, while the NASDAQ traded near the flat line. Alphabet kicked off a major week of mega cap tech earnings. The Google parent exceeded analyst expectations as the company saw strong quarterly revenue growth from its cloud business. Shares soared more than 6%. Meanwhile, chip maker AMD slid 10% as its fourth quarter revenue guidance failed to impress investors. The broader semiconductor sector fell on the day as shares of Super Microcomputer plunged 32%, guys. Ugh, that hurts, but that could be an opportunity for somebody. So you might want to put that one on the short list, right? You may want to put Super Microcomputer on the short list. Could be an opportunity. Construction equipment stock Caterpillar weighed down the Dow. Shares dropped 4% Wednesday after the company missed on earnings in the third quarter and lowered its full year revenue guidance. Tech titans, Meta Platforms, and Microsoft are set to report on Wednesday, while Apple and Amazon are due on Thursday. On the economic front, the latest numbers pointed to a mixed backdrop. The U.S. economy grew at a slower than expected rate in the third quarter, according to gross domestic product figures from the third quarter. GDP rose at a 2% annualized rate, while economists surveyed by Dow Jones had been looking for an increase of 3.1% for GDP. So GDP came in a little bit softer, but think about this, guys. When you look at our economy, really the measuring stick is you want the economy to grow above 2%. So 2.8% is still dang on good. People are spending money and the economy is healthy, in my opinion, even though we came in a little bit lighter than what the experts wanted. They wanted 3.1%. We came in 2.8, but you got to understand 2.8 GDP for the third quarter is still excellent growth, in my opinion. However, payroll data on Wednesday pointed to a stronger than expected labor market. According to the latest ADP report for October, private job creation jumped to its highest level in more than a year. Now, we also understand the real labor report is coming out on Friday. It's the jobs report. The ADP report is just private, right? That means no governments, that kind of stuff, no government jobs. But when the jobs report comes out on Friday, it's going to include everything, government, private sector, everything. And we'll see what that number comes in. But the private sector number came in a lot higher than expected. And here's the concern. You got GDP growing at 2.8%. You got the labor market doing better than expected. Do you really want to continue to reduce interest rates with those two things happening, right? You don't want to, a red hot jobs market, a red hot economy, and then you also reduce interest rates to add more money supply to an already red hot economy. So that's the rub, right? But I believe the Fed will continue on their rate cutting schedule. They have to. Their mandate right now is to maximize employment. So I think they continue cutting rates. We'll see though, right? They will meet on November 6th and 7th. And then on the 7th, they'll make a decision on the next rate cut. The S&P 500 and the NASDAQ netted a winning session on Tuesday. The Dow lagged, however, falling slightly. Growth-oriented stocks like the NASDAQ 100 returned to leadership on Tuesday, said senior investment strategist at U.S. Bank Asset Management. We are closely monitoring tech earnings releases to ensure businesses' investment in artificial intelligence and other productivity enhancing tools remains robust to support strong future earnings growth. Now, if you look at Google's Q3 earnings report, you'll see their cloud services business did extremely well, and they tied that back into artificial intelligence. They tied that back into artificial intelligence, actually assisting the cloud services business to perform better in the third quarter. So I think it's working. You got your hyperscalers, and obviously Google is one of them, that has tied back in artificial intelligence investments as a direct result of their cloud services business beating expectations on revenue growth. So that's good. Now you got Meta and you got Microsoft that'll be reporting today. And let's see what they say when it comes to top line revenue, bottom line profitability, and all the other areas of their business. Specifically, how is artificial intelligence, their investment in artificial intelligence, helping to increase their revenue and their profitability? That's what you want to hear from your mega caps and your hyperscalers. At least that's what the market wants to hear. Here's what I'm going to be doing, guys. I'm going to continue dollar cost averaging in and buying big boy blue chip and holding them long term. Like I said, super microcomputer down 32%. Listen, man, that might be an opportunity for somebody. I'm going to definitely take a quick look at it. I know their CFO or chief auditing person or somebody like that resigned. So all of a sudden people are thinking, what's going on with this company? And the shares fell. But that doesn't mean it's not a great company and they don't get back on track. You got to understand their 52-week high from a stock price standpoint was like $122 a share. And now they're all the way down to like $34 a share. And it's still the same company. So I'm going to take a strong look at Super Microcomputer today because, man, that may be an opportunity for me to pick up a real dip season, a great company with a big dip season. But I got to do a little bit more research on that. Outside of that, guys, Nvidia took a slight tumble this morning. The last time I looked at it, it was down to like $137 a share. And again, I think that's a direct result of Super Microcomputer, a direct result of AMD. AMD stock, like I said earlier, fell by 10%. So I just think semiconductors with those two falling, I think it just affected the rest of the semiconductor companies. Right now, Nvidia is at 139.27, so it's starting to move back in a positive direction. So I'm just gonna stay with what I've always stuck with, guys, and that's tech. I love tech. I think tech's the future, so I'm gonna hang in there. You gotta figure out your game plan. If you want 15 free stocks plus $30 in cash rewards, get yourself down in the description box and click on that Moomoo link. Open up that Moomoo account today. Go get the free stock. Go get the free money. Also, check out my website, www.richardfade.net. I got 10 big boy blue chip digital products, guys, that you gotta go check out. Over 400,000 of you guys have checked out the website, and a ton of you guys have purchased digital products to help you collapse time frames so you can get to your pot of gold faster. Go check it out. While you're in the website, consider joining the fastest growing financial community on Patreon. We're called the Wealth Builders. See, I'm wearing the t-shirt. And all we do in the Wealth Builders, we got 1,000 of us, by the way, in a little over 5 months. But all we do in there is help each other build wealth. None of us are experts. None of us try to play like we're experts. We don't try to tell one another what to do. What we do is we provide golden nuggets, tips, best practices, what's working, what's not working, and we provide a safe financial community for people to ask questions and not be afraid because they may not know a lot. So we help people that way with our tremendous amount of experience. We got people in there that got a lot of investing experience all the way down to newbies, and we help each other build wealth. If you want to join us, all you got to do is click on the membership button or the join button in the website. It'll take you over to Patreon and come join the fastest growing financial community on Patreon. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Thanks.